Lululemon reports earnings after the market closes Thursday, December 11th. And in this video, we're going to talk about why Lululemon stock has been crashing to begin with. And then I'm going to talk about why I feel like this is a little overblown and why I feel this stock is now undervalued at the current levels that it's trading at. And then we'll jump into the fundamentals to back this up with some data. And then we'll look at the charts and go over some trade ideas towards the end of the video. So without further ado, let's jump right into it. So why is Lululemon down to begin with? Well, some of the reasons why is a softening U.S. market, right? So they're seeing their sales decline in the U.S., and that's their bread and butter. That's where they make the most money, right? So I can see why investors would be a little wary about this, but there's reasons for this as well, right? So if we scroll down, product and execution issues, management admitted to disappointment with product execution, citing a lack of newness and assortment gaps. In other words, just pretty much saying that it's like the same thing that they keep selling over and over and over again, and there's nothing new to incite, their consumers. And so they're pretty much, this is something that they are working on now, and then they go in later to saying that, it could take a few quarters for them to start really seeing this pay off. But I know when this news came out during an earnings call, it was pretty negative, and investors did not like that, right? You want to see these companies executing. And then you have macroeconomic headwinds. This is really just saying, hey, there's fears of a recession. What's going on in the economy. Obviously, if we were to go into a recession, a company like Lululemon's probably going to take a pretty decent hit just because they are like a premium clothing company, right? You pay a good bit of money for their leggings and this and that, right? It is good quality as well, though. I'm always someone, I believe you get what you pay for in most scenarios. And yes, you can go buy cheaper leggings somewhere else, but they probably won't last nearly as long, right? I give you an example. I have a polo shirt, right? I buy collar shirts and they're super cheap from TJ Maxx or something. And, the collars get all wrinkly and, after a while they don't look good anymore. They don't look new and you can't wear them. You just got to throw them away. I have this polo that I've literally had for probably 15, 16 years and it fits and wears the same as it did back then, right? To me, that's worth it, right? That's worth the money. And that's kind of where I feel Lululemon lies, right? Nonetheless, though, if there's a recession, they're going to take a hit because people are going to stop spending money, right? They're only going to spend money on what they need, not what they want, right? And I would say this is more of a want, right? I want the nicer leggings instead of the cheaper ones. You get what I'm saying, right? So that's another reason why we're seeing the stock price down. You have the tariff impacts. This is, I arguably could be in the macroeconomic as well, but, they do a lot of business and trade and whatnot. So obviously if tariffs are increasing, that's beating up the bottom line of a lot of businesses. It's not just Lululemon, but we know that already, right? So yeah, the tariffs, that was an issue as well. Negative analyst sentiment. I always find this one funny because it's so true, right? And analysts come out and they can be super biased too, right? And they come out and they're like, oh man, sell, underperform. And this is when the stock's already been beaten to hell. And it's and I see these also come out sometimes before they report earnings. And so you tell me, how the hell does that make any sense? The company's going to report earnings in a couple days and you're going to come out with, a sell or an underperform rating before then? You don't want to wait just to see what their earnings are, just in case you're wrong, right? That's how they're not necessarily dead on. It is something to follow, though, and it does give a good idea and a gauge of where the sentiment is in the stock, right? And it's obvious the sentiment sucks in this stock right now. But that's another reason, right? Analysts aren't coming out upgrading, but this is another thing that I've noticed. Look at AMD, right? You got all these downgrades, and then the stock just starts ripping, and then it takes a quarter or two before analysts to start changing their minds and be like, okay, yeah, we're wrong. Maybe we should, change this to a buy rating. You get what I'm saying, though, right? Here, I don't think this is a negative, but a valuation reset, right? And this is what I'm most excited about, right? The stock has fallen dramatically from its highs, and its price to earnings ratio is now well below where it's ever traded historically. And that's what we're going to get into. We're going to look at that chart specifically. But let's just look at what's next, right? What's next for Lululemon? It's not all bad. So they are implementing new products, right, into their mix of assortments and whatnot and styles. And so this should be good for sales, right? And then this is one thing that I'm more bullish on, right? So yes, you have, the US market that's facing challenges, but the international growth remains strong, especially in China. China is a huge market and international growth in general is huge, right? And they've just started tapping into that. We'll see that on the charts as well. And then here, despite the slump, some investors see potential value as the core business remains strong, but the stock rebound depends on stabilizing fundamentals and improved product strategy, right? Okay. It's all things we pretty much talked about. Okay, so looking at the fundamentals, let's take a look at the total revenues, cost of sales, and then obviously the percent change of revenues, right? And looking at this, we can see why the stock is down as well, right? That's why I like looking at these charts. It draws a clearer picture, but you can see where we were, where the total revenue change was there for a little while, and then we really took a big hit, right? And then 3-4% quarter over quarter, right? That's nothing too crazy, right, compared to where they were growing before, and this hence why the stock was seeing so much euphoria, because they had big growth rates, right? Like, and you got to keep that in mind. Like, when a company's growing at 10 to 15, 20%, it's going to demand a higher PE ratio. When you're trading, or when you're only increasing profits by 3 or 4%, it's nothing really too crazy, right? You're going to demand a lower PE ratio, and that directly can impact the stock price with nothing changing fundamentally, right? So that's why I always like to mention that. But you can see that we do have some seasonality here. And, look here, this time last year, right? And then this time 2 years ago, 3 years ago, where we're at now, like, yes, we're expected to see a little jump here, but nothing like where we were before. And I think a lot of this has to do with the U.S. sales, right? And then just the uncertainties in the economy, fears of a recession, tariffs, like we just talked about it, right? All that's playing a part. And then so the company's coming out and they're lowering guidance most of the time, right, when they report earnings. And so that's also why we're seeing, at this point, like, there's not really high expectations for the company. They're pretty much saying, like, all right, we just have to, have the same amount of sales that we had back here, which makes no sense, because back here they were just getting started in, like, other countries and China and whatnot, right? So, like, in my opinion, like, yes, these are estimates, right, based off of guidance and analysts, but that's what I also like to see when it comes to the question of, like, should I buy the stock before earnings? Well, it doesn't really seem like too much is being priced in. So, again, one thing though I like about this is the fact that, you can see this is the estimates for this quarter coming up, right? And then we have the seasonality like we talked about. And so that will be the quarter that we're in right now, Christmas quarter, all that good stuff, right? And again, the expectations to me are just so low. Look where, again, we had hit previously during the fourth quarter, which is what we're about to enter into, right? And this is what they're projecting now. And then you can see here, we're projecting a decline in sales from last quarter, right? So it's like the expectations are super low. So when you start asking the question, should you buy the stock before earnings? Obviously that's completely up to you. You got to do your own due diligence. I'm giving you all my research and, the information that I found to help you make a better informed decision. But at the end of the day, it's up to you, right? Nonetheless, though, it's always like a 50-50 gamble when you buy a stock before earnings. But what I can say is that, they're not expecting much. It's not like a Palantir where they have to come out and blow investors out of the water for the stock to go up. Like, no, they could come out and have pretty bad earnings. And in my opinion, they're going to be like, all right, yeah, that was expected. Like, the stock might even go up after that. But yeah, so those are my thoughts when it comes to this and the projections. Again, you can see, like, they're not expecting any growth in the coming quarters pretty much, right? And that's part of the reason why you see the stock down, but that's also, in my opinion, a reason to say, hey, like, the expectations are so low even though these other segments are growing, right? So let's move on to the operating profit. Not going to spend too much time here. Kind of correlates with, the gross profit, but this is just like their core operating business, right? And then you got their margins here. So margins aren't too bad, right? Around 20% average to say. Again, you can see the seasonality up here, and then, this coming quarter, but based off of these charts, based off the expectations, you can probably say to yourself, like, yeah, I guess I see why, the stock's not really going up right now, because there's not too much to be excited about. Like, if anything, like, this is going down, right? Compared to we were, like, back in 22 and 23. So yeah, that's not exciting by no means. All right, so moving on to the consolidated net income. This is on a, yearly chart here, year over year. Again, this looks good to me, right? Like, yeah, maybe not everything is looking so pretty, but this chart doesn't look too bad. And at the end of the day, they're growing their bottom line. So I like that. Moving on to the total outstanding shares. Not going to spend too much time on this. I just wanted to bring it up because I see a pattern here, right? And the shares are declining. I like that because a lot of times when you see shares increasing, sometimes that could show like financial stress, and they'll do like a public offering to raise more money so they could, use that money for further investments to keep business operations running, whatever it is, right? Here, the shares are going down. So yeah, and this looks like a trend to me, right? I mean, it seems like it's been going down now for a little while, and so I like that, right? And I just wanted to bring that to your attention. Free cash flow, again, with the projections like coming down, right? We're not looking good there, but we are expanding into different, countries and areas, and they're, I'm sure they're spending a lot of money on expanding. Nonetheless, though, like their free cash flow does not look too bad, though. It just doesn't seem like it's going to have too much growth here in the future, though. And then you got the different revenues broken down by regions, right? So you have America's revenue, China's mainland revenue, and then the rest of the world. Okay, so you can see America's revenue, right? And we're starting to flat line up here. This is kind of what they don't like to see, right? I mean, this was like showing some pretty massive growth rates here, like we were talking about, especially right here in 21 to 22. Like we were really growing rapidly. That's when the stock price was also rapidly increasing. I think the exciting part, right? This is where I'm more bullish. Look at, the other charts. This is what I was trying to tell you is that, like, they just got into these regions not long ago. I mean, in 2022, right? And it takes a while to expand into these, new regions. But look what they're doing, though. I mean, they're growing. They're showing nice growth rates here, right? I mean, it doesn't look like much when you're comparing it to here, but it is growing, right? And both of them are growing. So I like to see that, right? You can see here where China, especially, right, where like the rest of the world was kind of taking over, and now China's trumping it, right? So nonetheless, though, like this is where I think there's just like so much potential for the stock. Like it's not even funny. And if they start to turn around the U.S. and America revenue, right, and then this continues to grow, like, yeah, I mean, dude, I think this is like super undervalued based off of, where this company could be in 5 to 10 years. So moving on, I wanted to break down this as well because the men's apparel is something fairly new that they brought out, right? And so, like, I want to see how it's growing. You can see the women's apparel, right? Super nice growth here. But look at the men's. I mean, it's also seeing nice growth, right? Like, I would not expect this to be as high as women's. The fact that, like, Lululemon, that was solely just focused around women at first, right? Pretty much changed it up, added men's product, and they've been able to market that well, right? Like you think about like Lululemon, first thing you think about is leggings, right? And you tell me as a guy, like, yeah, I'm gonna go buy Lululemon. I'm like, no, I don't need leggings. But their clothes are actually really nice. I bought some myself. It's really nice quality. I will say that, obviously at a premium price. But you can see again, they're growing this, and I like that, right? And this is again just a newer segment that they have that's just going to help the company continue to grow. And then we get into these other countries. Now you have both men and women apparel, and I can see the growth rate really coming back around. In my opinion. And even if it doesn't, they would not have to execute at too high of a level to, see the stock price come up a little bit, man. I mean, unless the company just completely starts to fail and go bankrupt, like it's getting very, very undervalued based off of what we're looking at here. I mean, at the end of the day, again, look, like they're growing in every segment, right? They're growing. Like they're not going down, right? They're not, I mean, yes, like free cash flow, arguably, and quarter over quarter and whatnot. But again, when we zoom out the bigger picture, like they're doing okay. All right. Like the fact that the company is trading at such a low valuation now, I think it's just a little overblown in my opinion. All right. With that being said, let's take a look at the forward price to earnings, right? That's kind of what I was just talking about. I actually made another video of like, the 3 top stocks I felt were good to buy right now. And Lululemon was one of them. And this is one of the reasons why. So I have 3 things pulled up here. We have the forward price to earnings here in the orange. You can see based off of this chart going back to, just February 2024, back about a year. This is the cheapest that you've been able to buy the stock since then. And then you also have the price to free cash flow, right? Trading at a 12, also as low as it's been in a really long time. And then down here you have the price to operating cash flow, which is also just extremely low compared to where it's traded at in the past. But let's just take those out of the picture, right? I just wanted to bring those up for those who like to see that. And, let's just take a look at the forward price to earnings. Let me go back as far as I can, okay? And you can see, I mean, we're back to 16 right now. It's almost 10 years ago. You have not been able to buy this stock this cheap ever. Ever. 16 was the last time it was this low, and that was the last slump that it had, right? Now we're trading at a 15. Like, this is just super cheap at this point, right? Like Lululemon would have to come out and just literally just keep effing up, right? And just not have any new products. The sales keep declining. Their revenue in other countries also start to decline, right? Like things would have to get really bad, in my opinion, for this thing to go lower. And by no means am I saying that it can't go any lower, because you see it all the time, right? You think stocks can't go any lower, and they do. You think stocks can't go any higher, and they do, right? So I'm not saying that it can't, and I'm saying that the upside is a lot higher than the risk at these levels. And I think based off the data that I just showed you, I feel like you would probably agree with that. With that being said, let's jump into the charts and take a look at some trade ideas. All right, guys, so I have the weekly time frame pulled up. I just want to start with the big picture so you guys can see where the hell this thing has been trading. I mean, this is another level of crashing, in my opinion. I mean, you thought this was a big crash, right? And look at this huge rally back up after some good earnings, and then, I mean, just gave it all back. But you can see when this stock does start to move, it moves pretty quickly, right? So nonetheless, though, you can see the level that we're trading at right here. If I move this down to here, I mean, this is perfect, dude. Like, look at this. This is exactly a level that I would expect it to bounce off of. You know, this was previous support or resistance, I'm sorry, and then support here, right? Also support here. Yes, we did wick down there very, very briefly. That was COVID, right? So that does not surprise me, and that got bought up very quick, but the consolidation really happened right around this level. So yes, this is a pretty strong support level, in my opinion. You can see the level that I'm thinking, if it were to drop from here, would be where that last wick was at 130. Holy smokes, if it gets that low, then I think we're in a recession at that point if we keep going lower and, you know, everything's selling off. That's how I feel. But we'll see. You know, earnings obviously could change all this as well. So nonetheless, though, let's zoom in a little bit. Now you got the bigger picture, right? So looking at the daily time frame. And then so we can look over here, right, where this is where we were in the slump last time, and then where it slowly started ramping up into earnings. But you can see that, you know, we kind of broke out of that trend, right? And then came down, made a higher low, and then came up, made a higher high, and then made a higher low, and then a higher high. And it just, you see that staircase up, right? Got rejected off the moving average, and then just ripped up during an earnings report right here. You can see, okay? So I can see something similar to that happening again, because look at this one right here, right? Kind of the same thing. We bottom out, we consolidate, and then we kind of just chop up before it gaps up, right? So we have, again, a perfect reversal, in my opinion, forming, okay? We have the sell-off again. We have nice consolidation this time. I mean, we've been consolidating down to this level now for, I mean, let's check it out. We've been down here for, wow, like literally almost the whole quarter, 90 days. It's just been consolidating down here. It's pretty crazy. Nonetheless, though, let's zoom in a little bit more, right? Because this is, based off of the technicals, this is looking really good to me, okay? So again, we have the big sell-off. You have the consolidation, right? Just meaning we're just consolidating down here in this channel, right? And then you got this break above the moving averages right here, right? So we came up, we finally were testing the moving average, and I want to bring this to your attention, right? You can see we test it, we test it, we test it, then when we actually touch it, boom, got rejected hard, right? We get back up around it, we get rejected again, we get back up to the 300, we get rejected, right? You see what I'm saying? Now we're back up above all the moving averages. You can actually see the moving averages crossing over now, okay, which is typically bullish. And not only do we have a breakout, but now this to me is a perfect break and retest. So like if you're watching this video and this is where the stock is trading now, this is not financial advice. I think this is a great time to start dollar cost averaging into the position. Again, should you buy before earnings? We'll get into that in a second. But, you know, just based off a long-term outlook, even like a shorter swing trade, right, for like, you know, 3 to 6 months, I don't think these are bad levels. But you can see that we literally just, I mean, we broke out of here, all right? So again, this is confirmation. We broke out. Now we're coming back down to retest, but we're still above the moving averages. Now we're coming back down to retest this EMA right here, the blue line. And then again, you can see that we're literally coming down to retest, right, previous resistance, right? I mean, it's perfect. This is exactly what we want to see. Now, we don't want to see a break below this level, but even if we do, I mean, I don't think it's the end of the world, because even if we come down to here, we're still testing some previous resistance, and this is back down to the moving averages, right? So now, you know, like I said, it's hard to break above the moving averages. I wouldn't be surprised if we came down to retest it, but at the same time, like, it feels like, you know, we're coming right back down here. There's a ton of resistance right here, okay? And, I mean support, right? So you had resistance here, and now old resistance becomes new support. But again, we traded here for a while. We traded here, and then we got above it and traded above it here for a little while. Now we're coming back down to retest, right? So again, I think this is a great spot to get in, and then you can put your stop loss under the moving averages, because if we break under the moving averages, then it's could be bearish, right? And it took a while to get back above these things. So yes, if we went back down and broke below it, yeah, I mean, that's not looking too good, and we could be going lower if that's the case. Nonetheless, though, let's look at some price targets, right, of where I would be looking to take profits, okay? I think this is a good time to start dollar cost averaging, not financial advice. This would be my next take profit, though, right? Again, the main reason for this is just because that was resistance before, okay? You can see here, right, we couldn't break above it, and then we finally got rejected really hard off of it. So that would be like my first level, right? But then my next level, and probably the more important level, would be this one up here. All right, so now we're looking at the daily time frame. So although we are crossing the moving averages on the 4 hour, obviously we're not on the daily because this is a bigger time frame. When this crosses on the daily, that's like a lot more bullish for the long term, right? Think of it that way. Like the longer the time frames, the longer the move, right? Like you cross the moving averages on the 4 hour, that should be setting up a pretty big move, assuming earnings does not just lose it, right? And crush it, or like assuming earnings aren't terrible. We're setting up for a pretty long move in my opinion, okay? And same thing, right? I mean, we could put this down to like the 5-minute time frame. If we cross the moving averages on the 5-minute time frame, that might just be a quick day trade, right? That's what I'm trying to draw a picture here. But nonetheless, so again, even looking at the daily, you can see it, we can't get above this blue line. Now we're finally above it. So this is looking very, very good based off of its technicals, also based off of the evaluation, right? There's a lot of things lining up, in my opinion, even though the sentiment is still shit, right? So this would be my next level, though, and like I said, probably the most important one. This is where I would really be looking to take some profits if I haven't taken them already. And that's just because, I mean, this is a pretty big run, and again, right, this was massive support at one point. It was support here, right? It was support here, and then we finally broke it, and it broke pretty hard. That's probably going to be resistance now, right? It's just how it works. Not to say that we can't just get rejected, come back down to like this level, retest it, and then go higher, right? In a perfect world, that's what we do, right? We come back down, we retest here, we come up to here. We get rejected a little bit, we come back down, right? And then we come back up, break out to this level, right? Come back down to this level, retest it, work back up to break out to the next level, right? In a perfect world, that's how the stock just keeps moving. Obviously, depending on earnings, we could just rip through all those levels, right? That's not impossible. So nonetheless, though, these are the levels that I have, and you can take a screenshot and take a look at this. But so, the next one, like I said, around 208-ish, right? And then you got about 235-ish, and then up to the 300-day moving average would be my next one. And that's around 275. And then to get the next level, I wanted to zoom out a little bit more, and we'll zoom back in. But I'm lining it up with the moving averages here, okay, right? So this would be, if it ramped all the way back up to here, right, like around that 320 to 330 level, and you can see, right, I mean, there's a lot of price action here. Not very clear, right, of where it is, but you can see some wicks there, right, some wicks there where it was resistance, 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 right, support, support, and then it also is lining up with these moving averages. So that would be my next level. And then obviously if we break that, then somewhere around here-ish, around $400, I would say. I like that psychological number, around $400. But before I give you my final thoughts, let's take a look at some price targets real quick. And I'm not gonna lie, this does not look pretty. We read in the beginning, this is also one of the reasons why the stock is down, so keep that in mind. This can also be biased, right? And a lot of them are lagging, right? Like, yes, the stock has been down for a while now. It's been in a rut for a while, and it took a while for these analysts to finally change their opinion on it, right? And typically when they start changing it for the negative is when the stock starts to reverse, and then a couple months of reversing, and then all of a sudden they're changing them back to positive, right? But nonetheless, though, this is not super nice, right? Like, we're already trading close to where the average analyst is. We have like a ton of holes. I mean, everyone's saying hold the stock, don't buy, right? But hey, be fearful when others are greedy, okay? And then obviously the high is $300, okay? So, just based off of those price targets, and obviously that could change with earnings, but the first level, like, this is where I would be thinking, right? Like, I'm taking profits probably around 234 based off of, what analysts are thinking, and then the highest I would probably ride it is back up to here, 275. Maybe I just hold on to a few more shares and ride it up to here, but in my opinion, like I'd be happy with that. And let's just take a look, right? Even from where we're at right now up to this line, right? Like let's put things in perspective. Okay, that's 14% right there. Okay, and then we ride up to this moving average, like I'm talking about, that's 29%. I'm okay with a 29% gain, right? If you get in right here, not too bad at all. And then this is probably the highest that I would hold it, and that's 52% gain, right? And then if we got back up to the 330s, which was the high price target, we're at 82%. So should you buy Lululemon stock before they report their Q3 earnings? In my opinion, I don't think it's a bad time to start dollar cost averaging into this stock, right? I think it is undervalued. I think it still has a ton of growth runway ahead of it, and it's going through a lot of shit right now, but this is typically a good buying opportunity, right? Like you buy when others are fearful and you sell when others are greedy, okay? This is a time when everyone's pretty fearful in this stock, right? It doesn't seem like it can get too much worse. I'm not saying that it can't, but this is also my honest opinion on Lululemon stock, right? So I think this is an amazing opportunity for the short term, right? I don't think there's too much more downside risk, not saying that there's none, right? But I think there's more upside than downside. So where am I? Like I would do half allocation now, right? And then save the rest in case it does have a bad earnings, right? So then you can average down, get your average even lower, and just hold it, right? And just keep averaging down as you can. I also wouldn't go like all out on this, right? I wouldn't say, hey, I got $25,000 to my name, it's all going to Lulu. No, I wouldn't do that, right? That's not what I'm saying. This is something like, I would take maybe like 10% of your portfolio to go into it, right? And that's kind of where my thoughts are, okay? Because there are some risk, and the biggest risk, in my opinion, and it's just if we go into a recession, this stock is not going to see pretty days ahead, right? And that's just the fact of the matter. But nonetheless, it is trading at very juicy evaluations right now, and it really makes it hard to ignore, in my opinion. So again, should you buy before earnings? I mean, I definitely think this is a great stock to start dollar cost averaging in, right? Just buy some now, buy some next week, buy the week after that, right? Or if you feel like you really need to get in before earnings, do half allocation, right? Because again, earnings is 50-50. I mean, this stock could be trading even lower, and I still would probably not be 100% positive to say, hey, it's going up after earnings. I mentioned this a few times in other videos now, like Palantir and NVIDIA. They just reported blowout earnings and the stock fell. So there's no rhyme or reason. But based off of what we said before, right, I think the expectations are super low for the company right now. And for them to beat expectations at this point, I don't think would be too difficult. And then I really hope they come out and raise guidance, right? Like, hey, things are actually looking a little bit better than we thought. Like our China and, revenues in other countries are really taking off, right? Those would be things that I'm keeping my eyes on. But nonetheless, I hope you guys found this video helpful. I will be making an update video on Lululemon after they do come out with their earnings, just to kind of keep you guys in the loop of, what's happening. But other than that, I will see you guys in the next one.